I think all of this is a really good reminder to investors to remain diversified, have exposure outside the US, and then to allocate to themes other than technology, such as global defense.
All right, welcome back inside our proactive newsroom. Joining me now is Jane Edmondson. She is the head of product strategy at TMX Vetify. Jane, it's great to see you again. How are you?
Doing well. Thanks, Steve.
So excited to talk a bit about the future of defense ETF, and more importantly, there's been some critical developments in defense right around the world, as in fact. So get us up to date.
Yeah, so after Ukrainian President Zelensky's disastrous meeting at the White House, which resulted in the US cutting off aid to Ukraine, Europe has really stepped up and it's set off a whole chain of events. Europe has come up with a Rearm Europe Readiness 2030 plan, and it involves investment of 800 billion euros for a massive ramp up in defense spending. It also includes 150 billion euro credit facility, the Security Action for Europe SAFE plan that will help fund this investment. And by activating the National Escape Clause of the Stability and Growth Pact, EU members are going to be able to increase their defense spending up to 1.5% of their GDP for a total of 600 billion euros over the next 4 years. So there's going to be a lot of spending to come. And some of the areas that they're trying to address are things like closing some of the military capability gaps in areas such as air and missile defense, artillery and munitions, drone and counter drones, and then supporting the European defense industry by allocating as much as 65% to European equipment from the EU, Norway, and Ukraine. There's also a plan to deepen capabilities in areas like AI, quantum, and cyber defense, and enhance readiness for worst case scenarios by stockpiling supplies, improving military coordination, harmonization, and mobility across Europe. And then finally, they're signaling that there's going to be continued support for Ukraine and a policy that they're referring to as a porcupine strategy aimed at deterring further Russian aggression.
So, Jane, that obviously has a lot of implications for U.S. defense, European defense companies that are looking at this. So, talk to me a bit about that, and maybe some of the companies that could be beneficiaries of what you're seeing.
Yeah, so we've seen a sell-off in many U.S. defense names and certainly a rally in a lot of the European defense stocks. And what's playing out is that there are many European companies that stand to benefit from all this new spending, including Germany's Rheinmetall, which is Germany's largest defense contractor. And in fact, it just overtook Volkswagen as the largest market cap company. And BAE Systems in the UK, French companies like Thales, Dassault, Safran, Italy's Leonardo Spa, and then Sweden's Saab. And a good way to get this exposure is to own a basket of these names in this theme that provides exposure to all the names, like an index product like NATO. And it's interesting also that U.S. names were already trading off, going into these events due to concerns about military spending cuts in the U.S. associated with DOGE. So now they're at even a further disadvantage as military contracts are getting canceled and equipment is being sourced elsewhere. Perfect example, Canada and Portugal are rethinking orders of F-35 fighter jets and considering buying French Dassault Rafale fighters instead. And then outside of Europe, Korea is getting a lot of these orders from Korean aerospace firms like Hanwha Aerospace. They're getting some big contracts because their equipment is cheaper and it could be sourced more quickly. So Poland just ordered some howitzers from Hanwha. Latvia and Estonia are considering similar purchases. And Hanwha is becoming known now as the Korean version of Lockheed Martin. So much to the dismay of U.S. defense contractors, these things are occurring. And just today, U.S. Secretary of State Marco Rubio was complaining about Europe's shift away from purchasing things from the U.S. But, it's really not that big of a surprise considering the political environment and what's going on with current events.
Yeah, absolutely, and it's only going to continue to be a little muddy in the waters in the next little while. So I'm wondering with this sort of in essence, new world order that we're seeing, economic growth, global military spending, where do you see it heading?
Yeah, so Europe was spending a significant amount of money on defense equipment outside of Europe, from non-European sources, and in fact, two-thirds of that was coming from the U.S. So that's now going to be flowing back into Europe, and that's going to create some huge economic changes that I think will be very positive. And Goldman Sachs actually put out some numbers saying that for every 100 euros being spent on defense, that will flow, half of that will flow back into the economy in terms of GDP. So, this should be very positive for Europe. Particularly Germany. They're going to be spending 500 billion euros on defense and infrastructure. They were teetering on the verge of a recession prior to the elections, and now the economic outlook for Germany is looking very, very positive. So all of this is playing out real time in the markets, with the European stock markets rallying. The Euro Stock 50 index is up something like 9% for the year, as opposed to U.S. Indexes like the S&P 500 and the Mag 7, which are down for the year. In fact, the Mag 7 has recorded its worst return in the last couple of years. So, I think all of this is a really good reminder to investors to remain diversified, have exposure outside the US, and then to allocate to themes other than technology, such as global defense.
Absolutely. And just keep in mind that could all change in an hour. I mean, that's just the way the
Yes,
world's
it is very
working these
fluid,
days.
that's for sure.
That's for sure. Jane, thanks so much. Great to catch up with you, and I appreciate your time.
Thank you very much, Steve.
All right, there's Jane Edmondson. She is the head of index product strategy at TMX VettaFi.